Our next topic is on purchaser transactions. This is when a business, such as a retailer, purchases merchandise inventory from another business, such as a wholesaler or manufacturer. These journal entries are a little easier than the seller transactions in the next topic. Purchases can be made with or without discounts. Regardless, the initial journal entry will be the same. When purchasing inventory, you will debit the merchandise inventory account. Other account names that can be used are inventory or merchandise, or both combined as merchandise inventory. The account is a current asset. The credit will either be accounts payable or cash. We will mostly be covering transactions that involve accounts payable and not cash, especially if there is a discount. The amount will be the purchase price. A discount in terms of this course means that if you pay early, you will get a discount on the amount you need to pay. I always say that we are not fortune tellers. We do not know the future. We are never 100% sure if we are going to pay early or not until we actually make the payment. We will account for the discount when we make the payment. Let me show you an example. This example shows discount terms of 2, 10, and 30. The very first number is always the amount of the discount. In this example, it would be a 2% discount. However, it can be another number such as 5% or 10%. The second number is the amount of days the discount is available for. In this example, it is 10 days. This means that if I make my payment within 10 days, I will receive the 2% discount. Next is the letter N, which means net. This is the total payment due without the discount. Finally, the last number will be when the net amount is due, which is 30 days in this case. In summary, 2, 10, and 30 means that I will get a 2% discount if I pay my bill in 10 days. Otherwise, I will owe the full amount to be due in 30 days. This is just one example. The discount percentage and days will vary depending on the company. Once again, this is something we take into consideration when we make the journal entry for the payment, but not for the purchase. Let's practice this journal entry. This is number 1 on your classwork. We're going to journalize the merchandising transactions for the dollar store. In Part A, on November 1st, the dollar store purchases merchandise for $1,500 on terms of 2, 5, and 30, FOB shipping point, invoice dated November 1st. Okay, so we purchased $1,500 worth of inventory. There is a discount offered of 2, 5, and 30. What does that mean? This means that we will receive a 2% discount if we pay within 5 days. Otherwise, the net or full amount is due within 30 days. Other terms are FOB shipping point, which we will discuss after this part. Let's journalize this. First, let's input the date of 11/1. Do you remember the debit account when purchasing merchandise inventory? It would be merchandise inventory. Remember, this is an asset account, and assets increase on the debit side. How much was the purchase for? $1,500. Remember, do not take off for the discount because we haven't paid yet. Since there are discount terms, we automatically know that the company is given time to pay, so we are not paying cash right now. What do you think the credit is? It would either be accounts payable or cash. It's accounts payable because our debt has increased and there are credit terms, so we know that we are not paying right now. The amount is the same of $1,500. Now let's discuss the journal entries for shipping costs. The seller will give the inventory to a public carrier, such as FedEx, UPS, and others. The public carrier will then deliver the goods to the buyer, which would be us in this topic, since we're doing the buyer transactions. Now, sometimes the buyer will pay the shipping costs, and sometimes the seller will pay the shipping costs. This is similar to when you purchase items. Sometimes there is free shipping, and sometimes you need to pay for it. The two terms for shipping are FOB destination and FOB shipping point. FOB stands for free on board. FOB destination means it's free up until the final destination. This means that the seller is paying for the shipping. FOB shipping point means that it's only free up until the shipping point. The seller will give the purchase to the public carrier, but that's it. The buyer will have to pay for the shipping. It's important to know these two terms for two reasons. One is that only the business paying the shipping will journalize the shipping costs. Reason number two is that it helps determine inventory ownership, which you will learn in Chapter 6. Now, for the journal entry. When the terms are FOB shipping point, the buyer will pay for the shipping. This is the journal entry. You will debit merchandise inventory and credit cash. You credit cash because you are spending money, cash is going down. The debit of merchandise inventory is a more complicated concept. We are adding the cost of shipping onto the cost of inventory. So if I bought a box of shirts for $100 and I had to pay $20 in shipping, then the shirts had actually costed me $120, not just $100. Now I know that I need to sell these shirts for more than $120 in order to earn a profit. A hint to the buyer transactions is that most entries will be affecting the cost of our inventory. Let's practice this next. We are still on number 1, but now we are on part B. On November 3rd, the dollar store pays $90 cash for transportation costs for the November 1st purchase. We know that the terms are FOB shipping point from part A, which means the buyer pays and we are the buyer. What do you think is the journal entry here? Remember, you can pause these videos to try these examples on your own first. As explained in the prior slide, the debit will be merchandise inventory. The amount will be the amount of shipping, which is $90. The credit is cash, and we will assume that for all shipping related entries that you're paying in cash. The amount of the credit is the same, of $90. Now let's look at returns. We purchased items and there's an issue and we need to return some or all of it back to the seller. An allowance is when we are allowed to keep the goods but at a discounted price. We will be focusing more on the returns and less on allowances. The journal entry is pretty simple since it will be reversing the purchase. It is essentially the opposite of entry of when you purchased it. We will debit accounts payable or cash and credit merchandise inventory. This is the opposite transaction of the purchase. Normally, if the initial purchase was cash, then you use cash here as well. If it was accounts payable, then continue using that unless stated otherwise. Let's practice this. For part C, on November 4th, the dollar store discovers and returns $200 of defective merchandise purchased on November 1st for a credit refund. Following the journal entry on the prior slide, what are the account names? Our debt has been reduced by $200, and now we have $200 less of inventory on hand. How much do we owe at this point? We had our initial purchase of $1,500, now we made a return. We have $200 less inventory for a total of $1,300. Our last concept of this topic is on payments. If the payment is made after the discount period, then the journal entry is pretty simple. The debit will be accounts payable so that the debt is gone, and the credit is cash since you are spending cash. The amount is the full amount you owe the company with no discount. Now, the journal entry gets a little more complicated when you pay within the discount time frame. You will debit accounts payable. This will be for the full amount of the debt. However, since you are getting a discount, you won't be paying the full purchase price. Second, you credit merchandise inventory for the amount of the discount. This is because the inventory has costed you less money since you are getting a discount. If you bought something for $100 and there's a $20 discount, then how much did that item cost you? It would have only costed you $80, not $100. Lastly, you credit cash for the actual amount that you are paying. This would be the purchase price less the discount. Remember, debits and credits have to equal. This is the most difficult transaction for the buyer. Let's practice this. This is part D on your classwork. On November 5th, the dollar store pays cash for the November 1st purchase within the discount period. The journal entries are the easier part, while calculating the amounts are a little more difficult. Since we know this is within the discount period, let's input those account names. We have the date as 11/5, the debit is accounts payable, the two credits are merchandise inventory and cash. This is all taken from the previous slide. Now let's figure out the amounts. Remember, we made a $1,500 purchase less a $200 return. We owe them a total of $1,300. That amount will be for accounts payable, which is why it's important to keep track. Now we need to figure out the discount amount. The terms were 2, 5, and 30. How much is the discount? It's 2%. We multiply 2% by the amount we owe of $1,300 to get the discount of $26. This amount is for merchandise inventory. Lastly, the cash amount is the full $1,300 less the discount of $26 for a total payment of $1,274. And that concludes the 4 journal entries that you need to know for making transactions for a buyer.